Now, in terms of bonds, it's not something that you really will be trading ever, same as ETF, by the way. But do you know what bonds are, what they represent?
Yes, I think.
What is it?
Yes, yes.
It's a governmental debt.
It's
a
it's
governmental
government. It's
debt.
like government stocks.
Now, it's a governmental debt. Imagine governments, okay, every government in the world, they borrowing money. Let's say US is actually number one in borrowing, and they're actually own now about 38 trillion in borrowing, right? So and it keeps increasing, by the way, to insane number. So
Yeah, but it's a
governments,
way to raise money.
they issued to long-term investors. That's why you see here bonds, let's say 10 years bonds, right? You can find bonds for 20 years, let's say 5 years, 30 years, and so on, okay? And so on. So now, listen, why it's important to understand what bonds are. You see, for example, today, you may see that the bonds are actually rising. You see, they're changing and they're giving more return on the bond. What does that really mean if the bond price increase? What does it mean for the US economy? What that means? Do you understand the correlation between the bonds and the economy?
When a country needs money, issue bonds. So when there is a change, that means they need money. So actually, the economy doesn't go well.
Right. Okay. So look, let me explain. So the bond is actual debt, right? It's a debt that the U.S. government, if we're talking about now the first one, U.S. 10 years, right? So you see, in order for you just to get an idea, they give you a chance to invest with them. You just give them, let's say, your capital for 10 years, and they give you a specific amount in return, right? That's, let's say, the return that you receive, and that is actually limited to the interest rate that is in that country. For example, in US now it's 2.25, right? That's the interest rate. That's how much you get. With me? When the government, let's say, when the economy is doing well, okay, it doesn't really need to attract a lot of capital. That's why where you can see the changing in bonds, what they give in terms of percentage. You see today it's rising. It's rising, and it means it becomes less attractive for investors to invest in the US economy. So that's why the governmental bonds have to go up in value to give investors better conditions so they can still go and obviously invest now because they just give, let's say, a change higher. So the bonds, it's like a very important barometer that will indicate for you how overall economy of the country is doing. So if the bonds, let's say, are changing, right, constantly up, it means that the government is increasing, let's say, the returns to attract the capital. It means there's something happening and they need capital, and that's why they need to give more money to attract capital. And when everything is good, then they actually don't need that. Then they drop down, let's say, the returns on that bonds just because they don't need that much money. You understand what? All right. So bonds is also important just to have a look from time to time because it's just some, let's say, sentiment that will allow you to learn about what's going on in the economy in general.